Next, we are joined by Julian Stevens, Managing Director of Sovereign Metals with the ticker code SVM. I will now hand you over to Julian to tell you more about the company's Rutile project.
Thanks, Jane.
Let me pull up your presentation.
Morning, everyone. Well, Sovereign Metals is a rutile company. We have discovered what is one of the largest rutile deposits in the world in Malawi in Southeast Africa. Next slide. So we believe we've discovered a strategic and globally significant natural rutile resource. So what is rutile? Well, rutile is a titanium mineral. Actually, it's the purest natural form of titanium, and it goes into mainly the pigment market to make paints, toothpaste, white plastic, etc. About 30% goes into the welding market as flux for welding rods, and about 10% into the titanium metal market for aerospace and medical. So titanium is about a 15 billion global market. And as I said, natural rutile is the rarest and highest grade and highest value titanium mineral. It generally competes in the titanium market with its poorer cousin, ilmenite. Rutile is about 95% TiO2, so very pure, whereas ilmenite is about 50% TiO2. And this is seen in no better place than in the pricing of these minerals, where rutile is priced at around $1,200 a tonne and above, and ilmenite above $200 a tonne. Natural rutile has a much lower carbon footprint when it's used in the major industrial process being pigment. It's favoured by pigment producers over higher energy and carbon intensive upgraded titanium feedstocks made from ilmenite. Natural rutile can be used directly in the pigment production process, and we can save about 2.8 kilograms of carbon dioxide emissions compared to some of the other processes using ilmenite. So a much greener, much more environmentally friendly mineral than its poor cousin ilmenite. And this is sort of borne out by a comment by Rio Tinto recently, where they say that upgrading of titanium feedstocks are high temperature and energy intensive processes, and they lift the group's average carbon intensity. So some of these bigger companies are targeting a reduction in CO2 emissions. Next slide, please. Well, titanium is defined as a critical raw material in a number of jurisdictions, and particularly the US and Europe, and it's growing in importance. Natural rutile is in supply deficit. It's genuinely scarce. And why is that? Well, there's mature mines in the world with declining grades, a general lack of new rutile-rich deposits to fill this gap. And for that reason, over the last 10 years or 5 years really, and looking forward, demand has and will always exceed supply. And this is borne out in the pricing. So we've seen significant price rises in the natural rutile price. This is a graph over the last couple of years of the spot price for rutile. Spot price is generally significantly higher than the contract price, but we've seen prices rise sort of 20 to 25% over the last 12 to 24 months. So $1,800 up to $1,800 in the spot market, and around $1,200 in the long-term contract market. At the moment, there's extreme supply side tightness, and this is being exacerbated by new production suspensions recently announced by a number of major high-grade titanium feedstock producers, including Sierra Rutile and RBM Richards Bay Minerals. So this drives a strong market fundamentals and will drive a robust long-term price. Next slide. So what have we found in Malawi? Over the last 18 months, we've made a major rutile discovery and announced recently a maiden JORC mineral resource of 644 million tonnes at 1% rutile. And that includes a high-grade component of around 137 million tonnes at 1.4% rutile. This puts us as about the second largest rutile deposit in the world compared to Sierra Rutile. And look, we expect to be able to grow our resource significantly in the coming quarters. Next slide, please. So what's the growth potential? Okay, the area in red here is the area that we've taken to the inferred JORC resource category so far. That's just 43% of the known mineralisation or the known mineralised footprint. So we've got an additional 57% of known mineralisation there in the green that's yet to be brought into the resource. So you can see that we will be able to expand our resource significantly with additional step-out drilling. Okay, so what are we targeting here? We're targeting a simple and low-risk operation, mining high-grade material from surface. In fact, all of the highest grades here in this deposit are right at surface. It's hosted in soft, friable material that should be suitable for hydro mining with high-pressure water guns or dozer trap mining methods. The processing is simple, using a conventional mineral sands flow sheet and producing just one high-value mineral at the end in the mineral separation plant. So it will be a simple mineral separation plant at the back end. And like all mineral sands mines, we will be undertaking progressive rehabilitation. And that, along with the low carbon footprint of this material, positions us for effective ESG outcomes for the project. So as I said, it's a conventional and proven flow sheet. So we have done a number of metallurgical programs here. In our last metallurgy program, we used a bulk sample of 1 tonne. We were able to achieve a very high recovery of near 100%, 98% in this case. And this produced, and we were able to produce a premium rutile product grading 96 and up to 97% TiO2. Next slide, please. And this puts us in the premium product specification category. On the right-hand side here, you can see some of our peers, but critically, we're well above the 95% TiO2 level to be classified as premium rutile. There's no critical impurities in this product. It has standout chemical parameters. Another feature of rutile is you need a coarse grain size for it to be able to be effectively used in the pigment making process. And so we have a highly favourable grain size here of 145 microns compared to other leading market producers of around 124 microns, 125 microns. So this means our material is suitable for all major natural rutile end-use markets, dominated by pigment and welding sectors. And we have sent some samples out to potential off-takers and have given us highly favourable feedback on the specifications of our product. Next slide, please. So we're in Malawi in Southeast Africa. Malawi is a stable, transparent jurisdiction, increasingly attracting international investment, and the government has significant potential and appetite for mining. We have excellent operating infrastructure in place here as well. Next slide, please. So there's an established rail network that almost goes through our deposit, paved roads, grid power becoming available, and established labour pool and other industrial services, because we're only about 40 kilometres away from the capital city, and plentiful fresh water sources for operations. So what are we doing ongoing? Well, we've announced our a huge initial resource, and we're rapidly continuing our work programs with two key pieces of work being undertaken at the moment. An aggressive drilling program, a core drilling program has commenced to enable us to upgrade our currently inferred resource to indicated. So just finishing off here, we have discovered what we believe is a new and globally significant rutile deposit within what we believe is a globally significant rutile province. It's a potential new source of environmentally friendly rutile to go into the titanium industry. Rutile has a much lower carbon footprint than its sister mineral, ilmenite. The market is in significant deficit, and that deficit is expected to grow. So there's a huge gap there for us to be able to fill in the market. We're in a stable, transparent jurisdiction with excellent infrastructure, and we've got a proven management team with significant African experience. Thanks very much, everyone, and happy to take some questions.
Well, thank you for the presentation, Julian.
Thanks, Jane.
I'll run into some questions now. So
sure.
Do you expect supply from major producers to continue to be on hold, further driving the rutile price higher?
Well, we've had a couple of announcements in very recent times from, I guess, a couple of producers of high-grade titanium feedstocks. So Sierra Rutile have announced that they're considering suspending their operation in Sierra Leone. And Richards Bay Minerals, or RBM, owned by Rio Tinto in South Africa, has announced force majeure conditions there and has shut down production, announced a couple of days ago. So those operations are having some difficulties. I can't predict the future and what will happen with those, but I do expect continued significant supply side shortages.
And there's just one saying, can you please provide an update on the company's Graphite project?
Sure. So we actually, a little bit of background, we actually started in Malawi looking at graphite, and we have taken our Malungundi graphite project to a PFS. Now we have recommenced work on that, on the graphite project, and some of the work that's underway at the moment is the completion of the environmental and social impact study, and that will culminate in us being able to apply for a mining license there and look for options to create some value for shareholders out of those projects.
There's another question that just popped up now saying, can you comment on any risks of being landlocked and transporting materials through neighbouring Mozambique?
I can. Look, we've got, obviously, we've got that Nacala rail corridor there. We've got a second corridor as well that is currently in construction, which will go to the port of Beira. So we have the option. This is a high value product, so we would have other options of other rail routes out of Malawi and we could also truck the product if you really need to. I don't expect that to happen for us to need those other options.
Oh, well, thank you, Julian, for coming on to Broker Briefing. It's great to have you on here.
Great, Jane. Thanks very much.